The IMF says global financial markets are headed for further volatility as central banks raise interest rates and introduce other measures to rein in inflation. The fund expects commodity prices to continue facing turbulence while stocks and cryptocurrencies extend losses. It also expects a slowdown in new stock listings. The global lender says policy changes in advanced economies are also discouraging international investments in emerging economies, just as they grapple with rising food and fuel prices. For more on this now, let's go to Agnes Gitau, who is GBS Africa Managing Partner in London. Agnes also sits on the board of the Eastern Africa Association. Many thanks for being with us today. Agnes, it seems that especially in Africa, Russia's attack on Ukraine has really created a crisis on top of another crisis when it comes to obviously devastating human costs and unparalleled food crisis. What are the most pressing issues for sub-Saharan Africa right now?
Ludwika, just like advanced economies, crisis in Ukraine and Russia has had a huge impact in the continent. One of the pressing issues is high cost of food and energy. Most of our countries, 2/3 of our African countries, import from both Russia and Ukraine. They make up to about 2/3 of Africa's GDP. So this would have an impact of potential social unrest with rising food prices.
Social unrest, right. And the IMF has also highlighted spillover risks for emerging economies from policy normalization in advanced economies. How big of a threat is this for sub-Saharan Africa? And also, can you help us understand the link there and the adverse impact of that?
Remember, the continent was already struggling from the pandemic, right? Our projected growth for 2022 was around 3.8%. This has already been downgraded. IMF had downgraded about 143 countries just because of these votes. So the spillovers, again, high prices of energy and food prices. 40% of income by Africans is spent on food and energy. So you can imagine they're earning less and paying more for what they consume. This again with challenges of infrastructure, challenges of insecurity, particularly in areas like in the Sahel and Western Africa. These spillovers obviously will have a great impact on the continent. And I guess priority is to come up with policies. It's a very difficult time for policymakers in our continent to come up with policies that are able to intervene, find solution, resilient solution. How do you address the fuel shortages, for example? How do you address the rising food prices and also the dependence on Russia and Ukraine for commodities like wheat and grain? What is the solution? And this is what policymakers are grappling with at the moment.
Right, and Agnes, on this very point, on the policies front, I mean, what interventions, if any, should be considered to really support developing economies, in your opinion?
We've seen some intervention by the IMF. I think just this week they announced that there's going to be a new facility, 45 billion for developing countries to tap into to address the shocks extended by the crisis from Ukraine and Russia. We've also seen some subsidies that are targeted, but also targeted support by the likes of the World Bank, supporting communities to access fertilizer. I think more importantly is how do we promote more supply, more food production, and also how do we encourage access to markets for developing countries to try and address this. Another point governments in sub-Saharan Africa are doing is to try and come up with solutions so that they can continue promoting private sector activity, and hopefully these will attract capital from developed economies. But some of the really targeted support coming from all sides.
Great. Agnes Gitau, many thanks for being with us today.
Thank you.